Your research out today says the Iran war doesn't matter to global investors. You write the most likely scenarios do not include a major disruption in the world's energy supplies or its financial markets. But how high is the risk that there is another scenario that does cause those things?
Well, Kaylee, great to be with you. I think, as Mike just put it, there are risks out there. There are a lot of uncertainties built into the legalities of this intervention, the domestic politics of this intervention, and what might come out of it in terms of unintended long-term consequences for the Middle East. But I think your base case, with a very high probability, has to be going into this conflict that there's going to be one big loser in all of this, and that is Iran, and Iran's armed forces in particular. You have had already last year the Iranian Air Force seriously damaged by the US and Israeli bombing. As we speak, the Iranian Navy is being decimated. And so the odds of Iran actually blocking the Straits of Hormuz or any other non-state actor doing it for any length of time is very, very low. And so while there's so many questions around the future of Iran, it seems to me that there aren't that many questions around the future of the world's oil supply, and in particular against the backdrop of pretty good supplies and ample OPEC capabilities to increase their own production.
Well, Christopher, I was speaking with Bob McNally of Rapidan Energy earlier today, who suggested the thing that those who aren't thinking this could lead to a sustained spike in oil prices are missing is the idea that the oil price is the only real leverage that Iran has now. They have to create that kind of economic pain if they want to be able to persuade President Trump to stop this campaign. So are you effectively saying that this will not result in the kind of economic pain that might change the mind of President Trump?
Well, I think first of all, that Iran is very quickly losing even that last little bit of leverage, not just having lost its senior leadership, but as I say, having its military completely decimated. And I think that's the clear path of this conflict. And it's going to happen in days and weeks, not months and years. So markets, I think, are going to look through that, see that the odds of that, which were small to begin with, are going to vanish before our eyes, and that they'll be able to see that against the backdrop, as I say, of good supply, lots of reserves, is not going to move the oil price very much. And as consequential as the Middle East is for its own region, for other geopolitical considerations, really the only way it impacts the global economy and the global financial markets are through the oil price.
Well, so when we consider then the wider economic impact here, if it's not going to be pressure on oil prices upward and therefore creating a kind of reinflationary impact, Christopher, when we're thinking about what this means, say, for monetary policy, does this change any part of the calculation for the Federal Reserve? Does it encourage them to stay on hold for longer, or do they effectively say what you're saying, which is on net, when we think about what this means for the economy, the answer is not much?
I think when you're looking at monetary policy, you're still thinking hard about when Kevin Warsh is going to be confirmed and what kind of rate cuts he's going to be able to push through. And, to the extent that this conflict comes up in that conversation, how much does this brief spike in oil prices feed through to the U.S. consumer going into the summer months, again, in the Western Hemisphere, having this glut? I just don't see how that's going to play into any sort of long-term serious conversation around where interest rates are headed.
All right, fair enough, at least when it comes to here at home. But are there other areas in the world, Christopher, that we should be watching that could have kind of a trickle-on effect in terms of the global economy? I'm thinking of China here, which gets a lot of oil from Iran. If there's a disruption to that, does that not have an impact in the second largest economy that we could feel by extension?
No, I think there are areas that might get there might be some follow through, as you say, in Asian markets. China may have some, although Chinese domestic reserves are also quite ample to be able to withstand, a brief interruption of supply. So, again, that's where there is more vulnerability, but still, to me, not a high signal that should lead you to think about selling any Chinese assets based on that probability. There are probably potential blowbacks, to the LNG price in Europe, as you just heard. I think, generally speaking, the real economic impact is going to come not in this immediate period of months, but probably over the course of years, where a region is going to be reshaped. And, do you get a settlement now between Israel and in Gaza? And the Palestinians? Do you get some sort of reorientation now of recognition between Saudi Arabia and Israel? That's the kind of thing that can really transform the investment possibilities within the Middle East and then maybe have some broader impact. But again, the immediate effect of this war, it's really hard to draw a line, to my mind, between what's going on and what we're seeing and a sustained impact on GDP this year and your market forecasts.
Well, Christopher, what about when we consider that obviously this war is not happening in a vacuum? It's happening against a background of more intervention by the United States in many different areas of the world, Venezuela included. Clearly, they have their eyes on Cuba as well. President Trump is gearing up at the end of this month to have a meeting with Xi Jinping. When you look at the wider landscape of a more interventionist, potentially United States, does that not need to elevate some kind of geopolitical risk premium beyond just what you would need to factor into your calculations for the Middle East? But this idea that President Trump is clearly not shying away from military conflict.
Yeah, I think that's a big question that we all are going to wrestle with, again, not over the next few months, but probably over the next few years. What kind of an actor is the United States under President Trump, under any of his successors? How much can our allies count on coordinating action together? Clearly, this was one where the Europeans were left in the dark until the last minute. The relationship, does this, questions lots of us have been raising, does this kind of behavior in Venezuela and Iran make it easier for Vladimir Putin to pursue his aims in Ukraine or Xi Jinping in Taiwan? Or does it make them think twice that, gosh, maybe the US is ready to use military force? It's not just talk. So I think those are difficult answers to give right now, but clearly those are the right questions to be focused on. Again, not something that's going to move markets right now, but continues to raise those questions around the dollar as a safe haven, the United States is the best place to make a long-term investment, and how reliable and predictable the U.S. will be as a global actor.